Hi, good morning, everyone, and welcome to today's episode of Let's Talk About Market, episode number 39. Yesterday we had the monthly expiry, and there are some interesting data points that I saw over there, including the long percentage, which is like at an historical low. So we'll discuss about that. We'll discuss about the market structure and how the swing and the daily swing and the average swing is behaving, and what is to be expected. There is a lot of ground to be covered today. So I'll quickly share my screen, and please let me know once you all are able to see my screen properly. Okay. And yeah, also if you all can hear me, can someone please confirm in the chat box? Uh, Okay, I think I got the confirmation from my team. Yeah, okay. Thanks, Vimal, for the confirmation. Uh, firstly, if you see the FIH data, to see the FIH data, you will have to hover over here, go to FIDI data, and go to derivatives. So in yesterday's session, basically they ended up, covering long and short as well. But now when we see the total net short, total short, that is 1,88,000 contract, and against that there is approx 12,000 long which is there. So when we do this ratio of the long plus short, okay, the ratio is now down to 5, almost around 6%, which is like the lowest level that we have the data since 2012, and this is like the lowest level ever that we have seen. So what does this indicate, right? This indicates that certainly there is a lot of pessimism, from the FI's desk. uh, in case of the absolute numbers, we have not reached an extreme. So it is, we have not gone to the prior low. So it's 1,76,000 contract that we are net short. But the problem that is happening right now is that, when we look at it in terms of trend analysis, as I had mentioned, that this was the breakout point which Nifty index had seen, but eventually the Nifty index gave up below that, and that was not a good sign. Okay, so typically when we see the breakouts not playing out, you know, it is usually a threat, and it suggests that such breakout points are usually occurs to get the bulls in, and then it ends up faltering. I think something very similar, I had even mentioned this, had happened to Larsen as well. So just to give you a context, sorry, let me first maximize the screen. Okay, on some news flow, Larsen had gone up. Okay, on that day it was looking like it will break out, but as I had mentioned, always look at it from a closing basis. What ended up happening was a false breakout over here. Okay, and from in the past 2-3 days, the stock has seen a significant correction from the highest level. So these are all sort of a trap, traps that we need to understand. And say, for example, given that we knew that the Nifty index is not so bullish at this point, the overall structure seems to be weakening. So in such scenarios, especially, such breakout points should usually be suspected. Okay. Now, as I was mentioning that when we look at this FNO data, this only suggests that the positioning of the FIs have gone from bad to worse. But when it turns around, this probably, if you even check in the history, this is like the longest time since they have been so much short. I don't know when this will reverse. So for for us to see the reversal level, at least the Nifty index should surpass 61.8% retracement level of the decline. If it does that, then it will give us a little bit of confidence that all this losses is being recovered, and from there is a scope of an up move. But as I mentioned, the real breakout might probably occur once we break past this trend line, because there are this 2-3 highs that are being connected. So that's where probably the greater confidence will kick in. But in the past 2-3 days, what is happening is that the pace of the decline has slowed down significantly, right? So over here we just had a 19-point dip, over here 20-point dip, as against we were falling 150, 200 points every day. So why that was happening is because when we look at the swing and the average swing, okay, both had come to this oversold zone. And usually when both of this comes in the oversold zone, we typically end up getting a sideways consolidation or even a pullback. Okay, so far this has been a sideways consolidation, and while this decline momentum had gone down completely, there were some stocks, or the RMI of many of the stocks were starting to inch higher, and that is why we have seen the daily swing also inching higher. Average swing is usually the smoothened version of daily swing, so this will take a little more time to turn up. Okay, but as I had mentioned, the next watching point will be when the daily swing comes to around 80 or 90. I mean, that's where we need to keep a close eye whether whether the pullback in the Nifty index will complete or not. But when you look specifically at the Nifty index, I mean, there is a sort of a falling wedge pattern that we have seen on the hourly chart. But the issue over here is that, so this is the falling wedge pattern that I'm talking about. Okay. Typically, these are bullish reversal signs that it indicates that a turnaround in trend should happen, which means that this decline, it is happening towards the end of it, so it should turn around. But now the issue over here is that the lower band and the 40 is very, band is below the 40-hour exponential average. In such cases, typically, the upside tends to be limited. So maybe, we can probably go till here and then consolidate a bit and then inch higher, if at all it has to do a bigger retracement. Else, if this is like just a small bear market retracement that will happen, so what we might end up seeing is a pullback towards this, and then again the next leg of decline is starting. So whether we falter around here, or maybe we see a deeper retracement, that is something that we need to see, because if you see Bank Nifty index, it has already broken past the 40-hour exponential average, right? So in this case, basically 61.8% retracement, which is at 55 to 26. Okay, this will be an important upside level to watch out for. Now, the problem with the Nifty index is that despite Bank Nifty seeing such meaningful retracement, we haven't seen any sort of meaningful retracement in Nifty index, is because of the Nifty IT index, right? So, I mean, Nifty IT has, ever since it broke down the previous low, it has been falling without any major pullback, right? Like you see over here. So this was the breakdown point, and from there, there has been no recovery at all. So, so yes, I mean, this is the weak link. Then the other thing is that Reliance, which is not participating. Okay, this has also literally gone sideways, doing nothing. So all this is pain point for the Nifty index, and we are not seeing any meaningful recovery over there. But as I mentioned, for the Nifty index, we are breaking past the 20-hour average right now. Okay, so in the previous candle we did not close above it, but I think now the closing should happen by 11:15, and by then maybe the 20-hour will be broken on the upside. So then the levels to watch out for on the upside will be the upper band, which is at 24,672, and the 40-hour exponential average, which is at 24,815. So this is like the upside levels that we would expect. Only if this breaks, then we start anticipating, whether a deeper pullback is going to happen or no. But remember that if this is a pullback, then there will be all those slow grind that we'll see. Supposingly, it will go over here, pull back, go up over here, pull back, then again go up, pull back, and that way, it can be a slow grind. So it can be frustrating and it can be irritating as well. So this is something that you need to keep in mind. Uh, the question would be that when do we start anticipating if the correction is complete, and are we headed higher? So for that, firstly, you need the RMI to see turnaround and then a crossover. Plus, prices should move above the averages, and it should move above the 61.8% retracement level, like whichever is the higher. Those all hurdles should be broken on the upside. That's where we start thinking that has the turnaround happened, and are we headed higher, or is there more to come? But until then, as I mentioned, we will just think of a pullback as of now, and then take it from there. Once again, as I mentioned, watch out for the daily swing, okay, and see, what is the, I mean, if it comes to around 80 or 90, that's where you need to be a little careful, okay. But the only thing that can happen is that because average swing has not inched up higher meaningfully, so it might consolidate over here a bit, and swing might be at the higher levels, and that may allow the average swing also to come up. Also, we had discussed yesterday that the percentage of stocks with RMI buy, that had also gone to 4, right? Even that is starting to inch higher a bit. Maybe we'll see a little more pulling back in this reading also in the days to come. So if these all indicators move out from the significant oversold zone, so it is not necessary that all these indicators might end up going to 80-90 level. I mean the average swing and all. All you may see is that there will be some pullback and then again a decline over here, and that way it might end up forming this positive divergence, and only later it will bottom out. Okay, because you will see these kind of things happening, especially when we are in the bear market, like you see over here, right? I mean bear market as in when we are entering into a corrective phase. So as you can see over here, there was a decline. It reached that 4 or 6 sort of levels, and after that there was a minor pullback in which there was a bounce, again a decline. Okay, this time it made a higher low, again an up move, then again a decline, it made a higher low, and then in this full-fledged pullback, we ended up getting this reading at 80-90. So these things can happen. The only thing, as I mentioned to you, was you need to look out for is these indicators turning out from the extreme oversold zone. Okay, that's where you would say that at least a meaningful sort of pullback is complete. Then the last thing that I wanted to discuss was the early positioning. Okay, over here, uh, so I will just give you a brief glimpse of how to look at it. Okay, usually what I see is the percentage change and the correction in the prices. Okay, you can filter it out in any way. I mean, supposingly, if you want to find that which are the stocks that have corrected a lot, so say over here VBL, and there is a good OI change as well. This means that there has been a short position over here, but always look at it in conjunction of what has happened in the past. Okay, so the reason why we have given this historical trend is so that you understand what is like a normalized open interest. Because sometimes what may happen is that, like, you would see over here, for example, so see, over here, what happens is that in Godrej CP, it shows that 82% OI increase. But what has happened is that the open interest normally used to be around 1 lakh, I mean 1 crore 20 lakh shares, 1 crore 30 lakh shares, 1 crore 40 lakh shares, somewhere around there. in the month of September, it had gone down drastically, and from there it has normalized. So maybe I would not give so much of importance to such stocks, but I would certainly want to give importance to the stocks where the open interest is, sort of reaching an extreme. Okay, so over here, so there are two things, like you would want to see which are the stocks that have gone up a lot, I mean gone down a lot, okay, and where the open interest is very high. So in this cases, basically, you will have to be a little patient with the scanning as well. Say for example, something like Crompton, okay, uh, 2 crore 29 lakh shares, then 2 crore 51. So this has been the range, but now it has gone to 4 crore 83 lakh. So almost the doubling of open interest in the past 1 year, right? So such stock should ideally catch my attention. So in this case, what do I do is that I go to OI interpretation. I type, sorry, Crompton it was, right? So I would see Crompton and I'll see what is happening over here. Okay. So I can see that there has been a dramatic increase in the open interest. Now the issue over here is that we have no signs of reversal yet, right? So in such cases, if the markets are bad, okay, then these kind of stocks might just continue to keep declining. I mean, there will be some pullbacks from time to time that we will see, but it might just keep declining. Okay, so just keep this thing in mind. Okay, so when I look at Crompton, I mean, despite there is a huge surge in open interest, but the trend seems to be bearish only. IT, we already know that since past many quarters, we are seeing, some rise in open interest over there. I mean, there is no doubt that there has been, big surge in open interest. If you all notice, Page Industry was the one where, the open interest had gone to a meaningful extent. So, just to give you a context, if we see Page Industries, I remember when we were doing one of the live session, that's where we had seen over here, right? I think we were doing some scanning, and over here it had reached an extreme. And see what has happened after that. Okay, basically, uh, at that point of time while scanning, it was showing that there is a significant, say short position or something like that. But actually, when we analyzed, so it was during this spike. Okay, that's where the open interest started adding, and you can see open interest was at an higher level. Okay, and from there it has taken resistance and it has cooled off, right? So there, so what it suggests is that in this cases, what is happening is that there might be some longs that were there in the stocks that is getting unwinded, and even if you see over here, it is almost coming towards the support level over here, right? Now, I would tend to imagine that if, I mean, given that the broader trend of the market is down, see, what might happen is that there can be some pullbacks in between, okay? But broadly, I would expect that this should come down, and maybe if the breakdown happens, then open interest should also surge, and there should be some shorts as well. So there can be a blend of long unwinding plus short build up. Okay, so that can be very deadly for the stock as well. So if so say if I have this pattern where the open interest is telling me that the OI was very high and now it needs some unwinding, okay, where longs were there and those are getting unwinded. So I would also, what I would also try and do is that make so wait, let me make a duplicate tab, and just to give you the context, or go to Page Industries and check its technical setup as well. Okay, and see how are they on RMI setup on daily, weekly, monthly. So on daily, as you can see, averages are broken. Weekly also, the averages are broken. And monthly, it is now at the 2040 month. Okay. Uh, Looking at the overall structure, I'll be very skeptical. And then, the bias would be that if the trend line resistance is broken, which actually in cash has already been broken, like you see over here, it's in futures market that is not broken, but in cash it is already broken. So what might just end up happening is that there can be a pullback, maybe towards this trend line, or a bit of a pullback towards the averages, and then it might end up declining as well. So so this is how you try and analyze, and that's how you can just go patiently through this screen. And I'm sure you might be able to you will be able to spot a lot of opportunities that can happen. And mind you, as I think I have even told in the prior webinars as well, where I've conducted on rollovers, that these are all a bit more short to medium term kind of positional plays. So you will have to be patient with that, and focus more on position sizing and so on, because it's not that यहाँ पे long या short दिख गया, so you just go and blindly short it on day one. You might need to build some position as well. So in that sense, this screen will be very helpful to you. Okay. So as I mentioned, I mean, you can put on any filters. Like you can look out for the price action that has increased. Okay. Or you might also want to do where the OI change has dropped down significantly. Okay. So what it will help you to understand is that whether there is a short covering or what is going on. Like you say, for example, you see in Bank Nifty, 24 lakh, 20,000, 21, 30, 34, 35. Okay, that had gone to almost 30, and now it has dropped to 20 lakh. So it begs the question, that is a short covering rally happening in Bank Nifty, or what exactly is happening, right? So if I do Bank Nifty and I try to search what is happening, and all I can see is that there has been a big drop in the OI, since this up move. And what had happened was that whatever little bit of shorting that had happened, that was in this phase, and this up move led to those short covering rally happening. So when we are sort of reaching at the bottom of the open interest, that's where you can say that market participants are now more or less neutral over here. And then you need to see the direction in which the position starts forming. Say, for example, in the next few days, if the Bank Nifty starts rising, and you also see the open interest starts rising, that means people are now trying to form a long position over here. But if you see something like this, that Bank Nifty is going down and the open interest is again surging higher, then that means that people are shorting, and maybe the next leg of the downside could also be unfolding. So that is the clue that it gets. So basically, when the open interest is towards the lower end, it tells you that people are neutral in that stock, and maybe some more move. Maybe some bigger move can be expected if at all we end up getting a price wise breakout, or the open interest starts building up. So as I mentioned, go through the screen. You should be able to get some good data points over here, and you might be able to make some maybe you might end up forming some bias as well, if at all you see some sectorial trends or something like that. Okay. So I think with that, I want to leave it over here. And if at all you have any questions, I can and basically, I can try and clarify it. So learning stock, should one keep the stance positive or bear? So as I mentioned, learning stock, so it's like don't give gyan, and do we go bullish or bearish? So the idea is that just to be on the point, in the short term there is a possibility of a pullback, but from a sort of from a structural point of view, we haven't break past that point where we can say that we can't expect a correction. So just to give you a context, this was the correction that we had seen. In the near term, what can happen is that we can end up getting a pullback of this fall. It's only about 25 120 or so. That's where we start thinking that is a bigger up move likely or not. At this point of time, the only expectation will be that there can be some pullback and maybe furthermore decline can happen. So that is how frankly I'm thinking at this point of time. And as I told you, I mean, data and everything is bearish at this point of time. But what I am not seeing is any major or encouraging sign from the indices. Okay, I mean, bank nifty is certainly looking a bit promising at this point. But when we, I mean, for a big move, because please understand that if at all the nifty index reverses, okay, and let me also show you with the data. Okay, this is not something that I'm telling it because I am biased. But if you see, so if you see over here, right, oversold readings, we ended up getting 20% kind of up move. Okay, oversold reading again over here, we ended up getting around 12-13% kind of up move. Oversold reading over here, we ended up getting 20% kind of move. Here again, oversold reading, we ended up getting 18-20% kind of move. Same oversold reading, 17-18% kind of move, right? So basically what I'm trying to say is that when you're going to get such 15 to 18% move, you would need strength in the indices as well, right? I mean, right now, say an index like IT is in dumps right now, right? Bank nifty is holding out, but not I mean, specifically showing a greater strength as such. So that's where we would need that alignment even in the indices to say that the up move can happen. So some index are definitely strong, say for example CNX metal. Okay, that so far seems to be trading above this breakout level that it had seen over here, right? I mean, basically the sideways consolidation that it broke out. Now it is perfectly normal for such index that you go up, consolidate over here, and then rise higher. Okay, something that has happened in say PSU Bank as well. Up move, consolidation, up move. Okay, so in that sense, if you see auto, that has been good. I mean, if you see the setup over here in this pullback, it has gone back to zero line, and now it is possibly trying to turn around. So as I mentioned, that is good. If you see metals is good, if you see PSU Bank, that is good. So these are three index that is on the top of my mind, that actually looks good. But then for every strong sector, there are some weak sectors like IT. Okay, no signs of a turnaround. If you see reality, no signs of turnaround yet. Okay, basically there's capital goods, but even if you see infrastructure, which has many other important stocks as well. So over there also, nothing so encouraging over here. So I mean, it is frankly a mixed bag. Like if you see pharma, we have spoken about this trend line breakdown happened, and then it has corrected. So we are not sort of getting that strength. I mean, visually, that strength is not possible. Even if you find stocks, they're not doing much, right? So that's where I'm suspecting that we might just end up getting some pullback. That's about it. I mean, that is the most, I mean, that is the conservative approach that I'm taking at this point of time. Because one thing that that, I would be like, say for example, if we end up getting those breakout points, and we had seen in the past, right, that we are getting those 17-18% kind of move. So I would want to probably wait for those breakout to confirm, so that I can get, I mean, I should be able to capture those bigger moves. Because even if I do a 17% from the low, that would come, somewhere around 28, 29,000. So I don't want to be, penny wise pound foolish, where I try to bet very big over here and then the breakdown happens and I'm lost. Okay. Over here, what one can probably do is that, try some trading, test out whether you're being correct or no. Because market itself will tell you. I mean, if you have taken a position and it's doing well, that means you are in the right direction. Okay. So try to take those test I mean, try to do those testing. And if at all you see the expansion in breadth also after the 61.8% is broken on the upside, then that's where, you will get a larger confidence in the market as well, that, it is sort of turning around. But see, as we speak, I think in last 1 hour only, it has again started to rise higher, and it is almost coming back to the upper band. Okay. So the idea is that maybe wait till 40 and see what the swing does, and then take a call. Okay. Whether are we headed for a deeper correction, or, I mean, deeper pullback or no. So that is what, I would think at this point of time. Tata LXC valuation chart. Okay, let me just try that. Mm. So Tata LXC, I mean, certainly, I mean, a meaningful pullback has happened in terms of valuations as well. Okay. So as I had mentioned earlier as well, if at all you don't see anything in consolidated, it means the consolidated data is not there for this particular stock. So please go to standalone and see. So see, what you can see is that when I see the max time frame also, okay, there is a lot of pullback. That, I mean, we have seen the valuation coming down, okay, but still it is at the higher level. Maybe, tactically you might want to play for a little bit of pullback, but I mean, I don't know. I mean, if you see the trend, it is down. Daily RMI, weekly RMI, you see whatever it is down. So at this point of time, it doesn't give me that comfort. Maybe from a 3-year basis, this has reached to the oversold zone. Let me also make it PE. Okay, so PE wise also it has come down a bit, but I mean, all I would say is that wait for a reversal to happen, because or else, the problem with this is that many other IT stocks are trading at 18-20 times as well, whereas this is trading at almost around 43-44 times. It might have its own growth story as well, I can't deny that, but wait for the momentum also to turn around. As of now, there are no signs visible over there, at least. Hi, extreme OI in Kolpal too. Can you please check? Let me check over here. Kolpal. So if I see purely the rollover data, I mean, since April, this seems to have normalized. In fact, even in Jan, it was 50 lakhs only. Let me check. So see, what is happening is that over here also, there was a decline, right? And in this up move, there was a short covering also that happened. Now, one thing that is surely happening is that, at the lower low, okay, I mean, this time around, we need to see where it forms the low and so on. But definitely, the cool off in the open interest seems to be suggesting that people are not shorting as aggressively as they were shorting earlier. And maybe in terms of price pattern, it could be, forming some sort of falling wedge pattern or something like that. So yeah, I mean, open interest surely is at an extreme level. I know, because many of you all had only pointed me out this, but so far, I mean, we are not seeing any major significant trend reversal level. So what is happening is that there are short bouts of short covering rally that we are seeing, but this is just happening like what happened in IT stocks. So let me just show you over here. So see, if you see over here, oh sorry, I actually added a wrong template. So I have to click over here, trade setup, pole pile. I'm sure it might not be crossing some weekly important averages, and that's why it is cooling off. So see over here what is happening. There is this candle issue. This we have already spoken to the developers. They'll take care of this. But as you can see over here, the 40 week is not resisting, and that's why it is going down. And again, the short buildup is happening. Something like this was happening in IT stocks as well, right? Pullback, key averages doesn't break, and then it starts cooling off. Okay, up move, short covering rally happens, then it again builds shorts over here. Then again a short covering rally, they again build shorts over here. So that is what seems to be happening with Coalpal as well. I mean, that is my best guess at this point of time. Learning, put a link of, okay, let me do that. But yeah, anything that is there, you will get it over here. Okay. And yes, one more thing is that this Q&A session has been uploaded. So many people were asking for that. So that has been uploaded over here. Now over here, if I see rollover analysis. Okay. So this, I've done it almost 1 year. This is 2 hours long. Basically, a lot of questions were also there. So maybe I'm posting this link. All the webinars, the format is that initially I explain for 45 minutes or so. Okay, you can see the link over here. I have put it. Maybe you can go over there and check it. Okay, and if you have any issues, come back in this live session and ask me. I'll be able to help you out. Today's daily swing, average swing is not. Yeah. So as I mentioned, Deepak, see, daily swing is a raw data. Okay, it will move very fast. Average swing is an average of daily swing. So maybe you might need those 3, 4, 5 days of consistent daily swing to rise. That's where the average swing will start turning. And once the average swing also starts turning, I mean, it will catch up pretty soon. So that is how I would look at it. But anyway, see, like I mentioned, if the Nifty index is coming towards this averages, and the Nifty index is hitting that, what do we say? The daily swing is hitting that 80-90 mark. Then I will take a step back and see what is happening. Okay, is there more room left on the upside or no? So that's how I would look at it. So at this point of time, average swing, it is important for it to get out from the oversold zone. Okay, if that happens, it will at least tell us that there was a lot of pressure that was there in the market. That pressure has been released by all these indicators coming out of oversold zones. So that is how I would look at it. But the next watching point will be, say, if example swing, average swing, both of them comes to around 80-90 levels, then I'll take a note of it, that what is happening in the market. So is it necessary that if Nifty is in downtrend, we can go long on some stocks like MCX, but did not participate? So yes, Dhruva, you sorry, Dhruv, you're right. That can be done. So it's all see. Frankly, it's all on individual approach whether they want to go against the market trend or no. But certainly you can do that. But what I have found out is that so right now, see, Nifty index is looking like in a pullback mode. So maybe in such cases, you might want to play for those stocks, where the move has not happened and a short covering can come, or a bit of a bounce can come. But when the Nifty is declining, I honestly wouldn't be that brave to anticipate that. Okay, uh, but as I mentioned, I mean, it's all individual approach. I mean, if you want to bear that risk, you can definitely go ahead. But all I would say is that try to trade with the market trend. So, say for example, if right now we are expecting a short covering rally, play for the short covering rally only. Okay, not don't wait for bigger gains because what might end up happening is that the pullback may end at some point and it will start declining again, and that's where you might be caught on the wrong foot. So yeah, I mean, you can look out for the stocks in that sense, but probably if this is just going to be a pullback, then don't wait for too long is what probably I would suggest. Monthly chart is the RMI reversal. So Sriranga, let me check. Sriram Finance. Hmm. So yeah, Sriram definitely has an interesting chart because see over here maybe you might not expect the RMI to even complete the cycle. That is because it is turning around for from the 20 month. The only thing Sriram might I mean you might want to see is that whether Sriram is able to break above the 61.8% retracement level or not. Okay, if it is able to do that, then maybe yes, Sriram might end up looking good. And you might just expect that this stock might just continue to inch higher after taking support at the 20 month, like it has been doing so far. Okay. So interesting setup. Watch out for 61.8% is what I would think at this point. Mitanshu, can you show the seasonality? Okay, let me just check over here. If I see Nifty 50 and if I see its performance normally during October, November, nothing that great. So basically, we have tried to put more data over here that is from 2005. So October shows a trend of 0.3%. Okay, November it shows 1.4%. So yes, maybe a bit of an move can be seen in the next 2-3 months. This is as per seasonality. Okay. Deepak, how does US government shutdown have impact on global market? Frankly, I have no idea. I'm just watching the price action. If it is moving up, I would imagine that the market doesn't care about it. If it does not, then maybe we'll have to dig deeper into this. But as of now, it doesn't look like that. But, I mean, this drama has happened in the past. Eventually will settle and they will again start. You know, they'll again get back to normal. That is what I would tend to think. Uh, so okay, so I'm taking this as a last question because it's almost 11:45 now. So Trent and DMart. Uh, let's check Trent and DMart and then wind up for the day. Trent Coming back to the previous low, I mean, the setup is honestly very weak. Mm, so not that great setup in trend. Maybe some pullback towards the averages is possible. Uh, Need to review only when the averages break on the upside. Till then, I mean, it is more or less a weak chart. Even DMART, if you see, it is actually weakening lately. So it was so far doing good. Uh, Maybe one level that you might want to see is that somewhere over here, this was the breakout point, and does it reverse from here or no? Maybe if we get a positive daily close from here on, you can expect a minor bit of pullback. But again, at the top, this will be the trend line to watch out for, right? So as of now, trend anyways not looking that great. DMART almost around the support zone. Need to see whether it turns around from here or no. So yes, that's what the chart seems to be suggesting. Okay, let me now quickly. There are some more questions that are there. Let me quickly take it up and Gopi, as I mentioned, we have all the just go to the YouTube channel of Strike IC. You just need to try Strike Money actually. Okay, you'll see our YouTube channel over here. A lot of webinars are posted. Just go to the live section and type over here rollover analysis, and you will be able to see the webinar. Okay, I mean, this is a bigger concept that I have explained in 1-2 hours as well. It may not be easy for me to cover in 5 minutes. So please go through this webinar. There are 3 or 4 webinars that have been done on rollover. Promoter or DI or FI increase holding can see this. I mean, as of now, we don't have a scanner for that. You might have to go to the stock individually and check. I mean, we don't have the scanner at this point. Kindly do one session with Rohit sir topic OI insight analysis. So Atul, I think we already did it through Mohit Agarwal. I mean, he is the best person, honestly, in OI strike OI insights. Um, I don't know. We have done it from the best only. So I think uh, he has a lot more expertise in this. Uh, yeah, I already replied, Sriranga. Sagar, can you say power grid is breaking out? Okay, we'll talk about this later. I mean, we are already running out of time. I'm just trying to see if there is anything that I can address quickly. Do you suggest consumption is going down in spite? See, honestly, learning stock, don't try to get much into the fundamentals because there are a lot of moving parts in that. Frankly, I try to see price action and then try to make sense what is happening. Okay, so if you see those stocks in RRG and so on, losing momentum or something like that, then just go with that flow because what we need to do is that we have to trade right on that. If you have a longer term horizon, then it is a different thing. But if you are looking for trading, then keep aside the noise of the news and try to see the chart more objectively. That will help because this is the usual mistake that people do. I mean, they think of long term. I mean, they think of fundamental news and long term stories, and then they try to trade on 10-15 days time horizon. So that usually doesn't work well. Okay, so just focus on the price action. I mean, GST news, everything is more or less in the price now. So watch out for the price action, and if there is a pickup in momentum, I mean, trade on that. Don't think much beyond that. Okay, so I think I've covered all the questions. So yeah, okay. Let me just take last question of Sagar. I don't want to ignore him. He has been a regular. So power grid. Let me quickly see the chart. Power grid is dull. It again showed signs of breakout over here, but went into that. So when the prices are doing that, that is never a good sign. So be careful from such setups. I mean, over here, see, if you ask me how could I how I could know that this will end up being a false breakout, the answer is that I wouldn't know for sure. The only thing that could have been done is that maybe you would have not reacted to this breakout because RMI had given a bullish crossover over here only. So maybe somewhere over here you might have formed some position, right? And not necessarily on the breakout. Maybe in the breakout you might have added a little bit more position, but net if you would have done the position sizing, maybe even Steven you would have broken out. I mean, because you would have bought some over here, some over here, and your average would have been somewhere over here. Uh, that is the only thing. I mean, how we could avoid such false breakout? The answer is look at the market, because if the markets are falling and the stocks are rising, I mean, those will usually be suspected, right? I gave you the example of Larsen. Something very similar happened. I mean, this was on the radar, uh, but market was not that great, and you ended up seeing a pullback in the stock. So this is the, I mean, best way to avoid the breakout stocks is look at the market trend. If the market is down, look at the breakout stocks very suspiciously, okay, and see whether, I mean, there is really a strong case or not. So yeah, I think with that, let's wind up for the session. It's already 50 minutes into the session. Let's catch up. So tomorrow is holiday. Let's catch up on Friday and see what happens. And more importantly, watch the swing data. Okay, watch the swing data and see whether it comes to around 80, 90 levels or no. I mean, if it comes to around those levels, that will be the time to be a little careful. Okay. So thanks once again for joining, and let's catch up on Friday.